Good morning. I want to give you an update on the markets. Last week was a roller coaster ride for investors. Stocks have been extremely volatile with big intraday swings in both directions. Last Wednesday, the Federal Reserve delivered the much anticipated half-point rise in the Fed funds rate. However, Chairman Powell said in the Q&A session, surprisingly took any short-term future 0.75 rate hike off the table. This encouraged a rise in the market, but when the equity markets digested the Fed's comments, the markets reversed and all the previous day gains vanished. Fed Chair Powell is trying hard to thread the needle as they need to reduce inflation without pushing the economy into a recession. On a positive note, the U.S. Bureau of Labor and Statistics reported that the U.S. economy added 428,000 new jobs in April, better than anticipated. Unemployment remains the same at 3.6%. We are witnessing an historic repricing of interest rates. The 10-year Treasury yield went above 3% for the first time since late 2018. The rising 10-year yield has kept down stocks, particularly in growth and tech. The longer the yield spends above 3%, the harder it will be for the stocks to find a bottom for 2022. As a reference, the 10-year yield started the year at 1.53%. Earnings season continues to deliver strong data, but there are several companies left to report. In general, our expectations are for the bond market to provide overall market leadership. We're looking for the damaged high-yield corporate bond market to heal. That should reveal the first signs of a potential bottom in stocks. As a final note, I'd like to mention that this is a good time for rebalancing and repositioning portfolios and for tax loss harvesting. For any questions, including on how this affects your specific circumstances and portfolios, please reach out to me.